Welcome to Pete's Investing Updates. Here we're going to be reviewing 15-minute price charts and the weekly progress of some random sample of blue chip stocks from Australia, the US and Europe, namely Telefonica, Commonwealth Bank of Australia, BHP Australia, JPMorgan and Chase, Volkswagen, Johnson & Johnson and Caterpillar. And we're showing any new open positions and closed positions and profitability and drawdown requirements. Firstly, we are not recommending to trade any of these positions or instruments. Rather, this is purely an educational guide to some trading ideas. Also, very importantly, don't forget to subscribe and click on the notification button to receive any updates. And for an added explanation to the strategies we discuss, please refer to the supporting videos with links attached in the description below. These will help explain the trading strategy we use, the average down process, and money management concepts. Okay, first of all, let's explain the chart and what each of the charts represent. Here we're showing this is a price chart, which you should normally be familiar with, of the ups and downs of the price movement for Telefonica. This top chart here represents the profitability of the buy and hold strategy. So here we're entering and exiting the trade and what it shows in terms of profitability over this is roughly an 18-month period. This chart here represents the buy and hold strategy. In other words, we're buying one set of contracts back here and we're holding on to that for a long term. We're not selling it. So here you can see we're down roughly $700 on Telefonica for buy and hold versus we're up 21.74. Actually, this is euro, not dollars. This is 21.74 euro for Telefonica. And down here, this is our entry and exit strategy. So if you look at this here, when the price goes above the minus 50, that's our first point of an alert. This little chart here represents it's broken above the minus 50, and then we enter a little spike here when it breaks above the zero mark. That's where we enter the trade. So it enters the trade there, and as the performance of that stock improves, as you can see here on the price chart, it closes out there. The exit is when the price moves below the zero, which it's done there, and our exit is above a reasonable profitable margin above our entry point. So we exit the trade there. And in this example for Telefonica, just to demonstrate in that little trade there, let's draw it from that point where we enter the trade up to there, we've made 312 euro. That's what it says there, or 0.31% increase in price on that particular point. That's just a short-term view of our trading strategy. Looking at Telefonica while we're on this chart, you can see here over the long term, we've made 21.74 for the buy and sell strategy, which we use, and we're down from our baseline of 100,000 euro on our buy and hold strategy, should you choose to do that. And that's what this chart shows. It shows the stocks we're trading, the codes, the dividend yields, and these were all taken from, as of today, from Yahoo Finance, the ex-dividend dates, the profitability in US dollars, Australian dollars, or even euro for a buy and sell, and the profitability for the buy and hold strategy. And the maximum drawdown. The drawdown, as I demonstrated, is from the highest peak of the profitability down to the lowest peak there. So as an example, let's choose that drawdown there. So if we draw a point from that high there to the profitability there, you can see we're 41.66 euro down in drawdown, and that equates closely with that. That's the exact number, and that's just a rough drawing on the drawdown from that point. Next, we'll look at Commonwealth Bank of Australia. So as you can see, overall, we're making 749 Aussie dollars on the buy and sell strategy. We've opened and closed these positions with multiple entries in these 3 points, and these other ones are all single $2,000 lots of entries. So $749 overall over the 18-month period versus it's just broken down to $4 profit on the buy and hold strategy. Next we'll look at BHP Australia. Now this is making $966 for the buy and sell strategy versus $261 for the buy and hold, with a few entries, multiple entries there. You can see there that was the, in each of these charts, that was the period during the COVID crisis. In this case, we entered just at the peak of the price before the COVID hit, and we rode that down to that point, entering another entry there, hence the double up of another $2,000 lots of contracts to that point there. And finally, we recovered from in that little period with a little profit from there to there. Next is JPMorgan. As you can see here, $16.53 US overall in profit for the buy and sell strategy versus 668. Now that's done quite well in the last few months. As you can see here, we got caught out near the top of the price chart before COVID hit. We rode that down, entered another one just below there, and another 2 to 3 contracts in that period there before we closed out it with a profit. As you can see there, we closed out the 4 positions. We still made a profit between there and there. And the exact amount we made in that period. So we go from that point there to there, $537 US in those few months after COVID. Volkswagen. We entered multiple contracts there, but since then the price has been moving upwards, so it's been doing quite well. Bit of a drawdown there during COVID. Overall, we're doing €783 for the buy and sell strategy, and €159. It's just broken above our break-even point of €100,000 there. It's €159. And we're still in the open position there on Volkswagen. Johnson & Johnson. Look at the long term first. Most of these were single $2,000 lots, only because the share price has been going upwards in most of the time, except for this little period where we bought another lot here. And that closed out with a profit. A couple of single trades there. We just recently opened up another set of contracts there, albeit the share price is dropping off. That's okay. Let's follow our strategy and see how it goes. Lastly, Caterpillar. Our buy and sell strategy is made $2,068 US versus a buy and hold made $1,581. One interesting thing to note though is, from about this point onwards, they're both, the buy and hold strategies outperform the buy and sell strategy. Let me just demonstrate that. So from this point to there, I made $611 on the buy and sell strategy versus, that's almost a break-even point, 100,000. 1547. Now why that is because the buy and hold strategy works well because it's letting your profits run. Versus here we're getting out prematurely, as you can see here. We closed out there at one period after one trade, opened another trade, so we lost a bit of profit there. Closed out there again. We missed out on that little price rise there. Entered another trade there. We got out there, exit again. That went down there. But overall, the buy and hold outperforms the buy and sell. Now, that's fine as long as you can, as I keep saying, as long as you can pick the stocks that do this, incrementally increase month over month and week over week, then the buy and hold strategy works beautifully. Otherwise, if it does this, it goes sideways or even downwards, the buy and sell strategy outperforms the buy and hold strategy, as I demonstrated previously. And if you look at it here, again, over the 18-month period, it's approximately 17 months on average. These are all months. You can see there the buy and sell strategy is performed 8,758. That's a combination of euro and Aussie and US dollars, but let's call it 87.58 currencies versus 24.92. And here I've just put in another table to demonstrate, as of today's date, how many months difference it was from the opening chart, from the opening date. And that opening date is taken from back here. And it's saying, okay, for each of these, it's traded that many months. So it's basically that profitability or that revenue divided by that number of months works out to a number of dollars or euro per month. So I know I've got US, Aussie and euros here. So let's call it currencies, 554 currencies per month, which is basically 8758 divided by the respective number of months on average. Okay, for added explanation for our strategies, which help explain the trading strategy, the average down and the money management concepts, please refer to the links in the description below. Thanks everyone for listening, and we'll see you next week. And don't forget to subscribe and click on the notification bell. Thanks again.